Welcome to my October 2024 update on the best savings accounts, the ones that will pay you the most amount of money. I'll get to those in a moment, but before that, I'm going to take you through some new products and some other changes that is worth knowing about. We'll race through these ones. First of all, just kind of give you a good consensus of what's going on with accounts. Getting 5% is getting very, very, very hard. Now, that's not including some of the regular savers we'll talk about later on and a couple of other accounts which have like little extra perks and features which will boost it up, but with conditions attached. But everywhere else, very, very hard to get 5%. The ones that are giving it, other than the odd short-term fix, are mainly notice accounts and the easy access accounts. And there's a reason for that. And that is because although at the last Bank of England Monetary Policy Committee meeting, which took place in September, they didn't reduce the base rate again, there is still a very, very strong expectation, not a guarantee, but an expectation that they will reduce it in November. So in the middle of, early November, beginning of the month, and also in the middle of December by similar cuts that we saw in August. So currently at 5%, it's expected to drop to 4.75% and then 4.5% by the end of the year. Again, as I always say with these things, there's not a guarantee. It might not happen. There could be bigger cuts. You never know. But because of this market expectation of that's going to happen, those fixes have already priced it in and reduced those rates. And that's why just in the last few weeks, that last 1 year fix paying above 5% disappeared, and why some of the other ones judging you a little bit more than that, the short-term fixes also have nudged down. So when I take you through rates, you'll see which providers offer what. But I guess the thing to think about here is if these fixes have already priced in the cuts, the top ones at least. Now, these can change, obviously. Those top ones can keep falling, so there's no guarantee. But if they are broadly priced in, and we've got another month before the first base rate cut, you might be better looking at those higher paying easy access accounts where you're going to get close to, if not 5%, than just get that money for a month or 2 months, whatever it might be. And then if you need to lock your money away, getting a fix. Obviously, the risk there, you guys know, the risk is that those fixes do reduce even more and you've missed out on those rates. So the flip side of this is if you really do want to guarantee and lock in a high-ish rate, still historically, based on the last 10 years or whatever, it's still pretty decent fixed rates, you might want to go ahead, or you might want to see things out. And as you'll see later on when we get to them, in fact, the best paying to easy access account is actually an ISA, but we'll come back to that. Some news for you, some new accounts that have come along. The first one is HSBC have increased the rate on their regular saver to 7%, which is really good. That's one of the best ones you can get out there. It is, however, as with most of these, only available to current account holders. Now, you can be an existing or a new HSBC current account holder and get access to this regular saver. But before you think about opening one up, I would maybe consider one of the other options I'll come to later on, simply because there might be other advantages to them. But if you have an HSBC current account and you want to get a really good rate for your savings, then definitely take a look at that. That's 7% and it is fixed for the year. So if rates do change elsewhere, your lease for that 12 months, that is locked in. The other new one to talk about is something that I got advertised to me on Instagram. This is something called Sidekick. I wouldn't be surprised that those of you in London are they feel like the kind of app that's going to be advertised all over the tube, if you know what I mean, right? Anyway, they've got a special offer on an easy access account, which looks decent, but also isn't as good as it may also appear in these ads. So I'll take you through what they're offering. So the basic offering is not that exciting, 4.34%. which can be easily beaten, as you'll see later on. But for the first 12 months, they will give you a bonus, which brings us up to 4.89%, which is not the top, but close to the top. So just for getting a decent easy access rate, that might be worth taking a look at. However, the second part of this, which is what a lot of the adverts seem to sort of be pushing, is the opportunity to increase that even more to 5.34%, which would put it way ahead of easy access without any kind of limits on deposits or limits on withdrawals and things like that. Would be really good, yeah. To get that, you have to put £1,000 into their investment product on the same app. Now, only £1,000, but it's not like a huge amount there. And it may well, those investments themselves may perform quite well as well. You'd hope they would when you're investing for the longer term. They might also bring a decent return, which you think would push things up, to a similar amount on that grand as well. The problem is their fees compared to other investment apps are really, really, really high. So you're going to take a big hit with that. So certainly if you do invest and you're a lot of money to put into savings as well, you might want to have a look at that, because a decent chunk of cash at 5.34% could be pretty decent. Again, it's variable, so it could change. And then you can look at the investing option for, so just £1,000. It doesn't have to be all your money, but personally, I think worth a look for that first thing, that bonus for 1 year. Probably not for most people. That extra thing isn't going to fly. Now, I've got a couple of warnings for you here now. The first one is around Plum. Now, Plum is something I'm a big fan of for its auto savings feature. This is, if you struggle sometimes to save, right, to put money aside, one of the things you can do is connect for free your current account to Plum, and it will use an algorithm to look at your bank account and work out how much you can afford to put aside, and it will transfer that money across. So a big fan of it for that. Also a big fan of it as a quick and easy direct debit you can set up for bank switching when you don't want to have something going on permanently or move one of your bills over. You can set it up, money goes over really quick, you get that bank switching deal. Brilliant. Now, I don't need to do extra savings every week. I've got a good sort of automatic savings stuff on payday going through, so I don't need that. So once those direct debit feature had been fulfilled from an earlier bank switch, I turned off that algorithm. I turned it off, right? So no more auto savings for me. Okay, didn't need that savings feature, didn't need the direct debit, turned it off. Still got the app there, just in case I need it in the future. Now, the other day, I suddenly got a notification from my TSB account saying that I was overdrawn by £1 because £1 had been transferred from Plum, using Plum from TSB to its savings pot, because TSB was the current account I'd used it for a switching deal. Now I turned this off. So this has just automatically turned itself on, right? And maybe it was an app update that did this. Got no idea why it suddenly turned it on. I went and turned it off again and had to transfer that £1 across, which is a bit of a pain because I don't use this TSB account, so it's sitting there pretty much dormant in case I need it in the future for something. Now, the reason I'm telling you is you might have done something similar, and if it's an account you don't check regularly, then moving that money, auto savings, to Plum savings pot could have made you overdrawn. So please do check that if you have signed up to Plum at any point and turned on that auto savings feature. The next warning for you is around Kroo. Now, Kroo is an account which is a bank account, pretty decent, relatively basic, sort of just, startup digital challenger bank that's going around. The thing that maybe makes it worth looking at is that it offers a pretty decent rate of interest in your account. So currently that's 4.1%. So if you have lots of money in your current account, not the best thing to do, better to have it somewhere separate because it means you don't actually spend that cash accidentally or whatever it might be. But you have a bit of money in there. 4.1 is good compared to what you're going to get anywhere else on in-account interest on larger balances. Now, this is a tracker rate, so it's currently 0.9% below the base rate. From mid-November or late November, that is going to change to 1.1% below the base rate. So let's assume the base rate doesn't change in November. It would mean that 4.1% rate drops down to 3.9. And obviously, if you do see a cut there as well, it will go down even further. So just interesting, if you are using Kroo, watch out for that. The next warning I have for you is anyone who has got money with Tesco Bank in their savings account. Now, this isn't nailed down, but it's very likely to happen that in the next week or so, the regulator will approve Barclays Bank buying all the assets from Tesco Bank. What that means, your product will still be a Tesco Bank savings account if you've got one. And chances are, if you have got one, the interest rates aren't going to be amazing, so you think about moving it anyway. But let's say you've got one, maybe it's a long-term fix, and it's giving you a decent rate or whatever it is. When it moves over to Barclays, assuming it does happen, that will happen on the 1st of November. Again, it's got to be approved, but likely to happen 1st of November, move over. Then Tesco Bank and Barclays Bank products will share Financial Services Compensation Scheme protection cover. Now, again, you have to have more than £85,000 across those two different banking providers for you to not be protected. So it's not going to be an issue for most people, but if you do, that is something certainly to watch out for. That isn't going to be a problem, though, with the literally just approved merger between Nationwide and Virgin Money. So Nationwide Building Society have bought Virgin Money. Eventually, at some point, they will transition the brands over and combine things. But for the time being, they are going to remain as separate financial institutions, which means you don't need to worry about that FSCS protection if you've got money in Virgin and Nationwide and collectively they go over 85k. Because they've got their own 85k protections going on there. Now, again, this is still early days. There will be changes later on, but for the moment, you don't need to worry. And the last bit of news I want to give you before I get onto those best accounts involves Snoop. You might be aware of Snoop. It's one of those it does a few things. It's an app that lets you look at multiple current accounts in one place, makes you look at insights, but also suggests, maybe you want to switch your energy or whatever. I'm not a massive fan from that side of things, but it's certainly a useful app to look at. Email came out from them just the last week or so saying they are going to be launching their own savings product. I have no more information about that just yet, but obviously as soon as we do, if it is decent, we will produce some content on that so you know whether to give it a go or not. I imagine if they're doing this, they're going to want to try and be competitive. So maybe there's going to be a market leading rate out there. Fingers crossed that is going to be the case. Now, there haven't been any new special offers to share with you this month, which will help boost your returns for opening up new accounts or doing other sort of things. That may change. And if they do change, obviously, it's another month until I do another one of these updates. So you might want to make sure you are signed up to our newsletter. becleverwithyourcash.com/newsletter is the place to go. It's free. It comes out every Thursday morning at 7 a.m. All the content we produce, but also any good deals and stuff. So in case something is a bit more short-lived, make sure you are signed up there. Okay, let's have a look now at the best paying savings accounts right now as I record this on the 3rd of October 2024. Now, if you guys catch this update every single month, you'll know things change all the time. Literally half an hour later than this, there could be something that's different, but the next day or two, things might have moved around a little bit. So this is literally just a glimpse, a snapshot of the top paying ones right now. If you want to make sure you are completely up to date, head to our best buy tables over on the website. becleverwithyourcash.com/savings is the URL that will take you there. And myself and the team, we're updating that twice a day, if not more, when rates do change. So you'll be sure you're going to be able to find out if anything better has come along, or if any of the ones I talk about get pulled from the market and disappear, what the next best option is. And if you are saying, well, what about this? What about that? Why haven't you included it? Again, these are just the top paying ones. There will be other options just below this, maybe a smidgen below this, which might be absolutely fine to stick with rather than move away from. But that is obviously down to you to kind of go to our website and look at the best buy tables where more of these are listed. So let's start with the best paying easy access account, as I always do, because most of us want our savings and easy access, right? The top one here is still the Santander Edge Saver, which pays 6% for 1 year on balances of up to £4,000 if you also have a Santander Edge current account. So it's a bit more complicated, but that current account itself isn't too bad. It will give you cash back on your bills, 1% on your bills, which will also cover the fee that comes out of it every single month from that current account. But actually, at the moment, there's an offer where you don't pay anything for that account for 1 year. So you absolutely will be getting, if you open it up, you'll be getting cash back on your bills, plus you'll be getting that full 6% on the savings account. Incidentally, you can also open up a joint account of the current account, and from that, open up 2 Edge Savers. So between 4 of you, potentially there are 16 grand you can get at that sort of 6% rate, which is worth a look. But let's go for something a little bit more simple, shall we? Now, normally I wouldn't cover ISAs this early on in the roundup, but I'm going to lead with this one here because the top paying easy access account right now is from Trading 212. You can add as new money every financial year as you can with any ISA up to £20,000. Of course, that is across all ISAs you have that you add new money to, okay? So if you only have this, you can put 20k in. If you have an investment one, maybe another cash one, then that'll be spread across it. But that is on new money. You can transfer more over. So if you have got money in an ISA, you can transfer it across and get this rate of 5.1% as well. That is the best one out there. It actually was 5.2% and then dropped down to 5%, then went back up to 1% in the last month. But that's where we are right now. That is the top one. Now, in my last update, I also talked to you about changes happening with CHIP that were going to come along. Well, they have obviously now happened. The new CHIP Easy Access account is our next one here. It pays 5%. Now, this is called Easy Access, but it's actually limited access because you can only make 3 withdrawals in a year. If you make more than 3 withdrawals, the rate will drop. Also, that rate is only for 12 months. After 12 months, it would also drop. But it's definitely worth a look if you don't need to take your money out frequently. You want to have it available to you. If there's an emergency, you can get the cash out, or there's something you're saving for, you can get the cash out. That is one to look for. Now, I won't repeat myself too much. Remember, last month I did tell you about the drop from the previous CHIP Instant Access account, which doesn't have any restrictions how much you can withdraw, which was 4.84. That's now much, much, much less than that. So you certainly would want to be looking to move your money out of that old CHIP account, whether it's the CHIP's limited, this limited access one, or one of the others we've got here. Next up, we have got Kahoot Sunny Day Saver. This one is restricted to £3,000. That's the most you can earn money on in there, but that is 5% still. That has not dropped. So they're your ones above 5. Then we're looking at ones another jump down. So Sidekick, what I mentioned before, 4.89% for the first year. Monument by Raisin, 4.87%. Oxbury, 4.87%. And Kahoot, its normal easy access account, 4.85%. Worth just saying on those 2 Kahoot accounts, they are part of Santander. So they're sharing that financial services compensation scheme protection with that bank. Again, there will be other options over at becleveryourcash.com/savings, but certainly ones to have a look at. a couple of slightly sort of variations here. I've already mentioned Train 212 for its ISA. If you don't want to use the ISA, they do have 5.1% as well on its investment account. So it's slightly more complicated here. I did cover a video and an article on this when it launched earlier in this year about some of the risks with this. They're very, very, very low risk, but it's not a normal easy access account, but you will get that 5.1% rate on large amounts of money outside of an ISA, so you might want to consider that. Then other places you can get 5% basically are from notice accounts. These notice accounts are good options to consider if you know you don't need to get the money in the next, soon. There's something you know you might need it, or you've got some money in easy access, and then if something goes wrong, that's going to cover that initial emergency, but you've got time to give notice and get that money out of those notice accounts. Top 2-month one here is Vanquish, 5.05%. Top 3-month is BLME, 5.15%. Top 4-month notice, Charter Saving, 5%. And top 6-month one is Ecology Beyond Society at 5%. Obviously, 6 months is a long time to give notice for, but it's certainly something you might want to consider. Let's look at fixed rates now. As I said, these have been particularly falling quite hard in the last month. Well, they've been falling for the last year, haven't they, really? But we've seen more drops just since that base rate cut in August. So the top 3-month fix is with Oxbury at 5%. The top 6-month fix is with Gatehouse via Raisin at 4.9%. And the top 9-month fix is with Monument at 4.85%. Then let's look at 12-month fixes. The best one here is via a site called Prosper, and it's with Al Rayyan. That is a 4.9% rate. It's actually 4.8%, but they give you a bonus of 0.1% at the end of the year to jump it up there. Below that, you're looking at much decent cuts below that for the next 1 year. 18-month Synergy 4.7%, 2 years UBL via Raisin 4.61%, 3 years GB Bank via Raisin 4.55%, 4-year fix Hampshire Trust Bank 4.27%, and the best 5-year fix GB Bank via Raisin at 4.4%. So they're your fixes if you want to go for them. Now, regular savers, we obviously spoke about that new one from HSBC before, but let me take you through the other top options here. Other than this one right at the very top, I'm going to talk about, they all require you to have a current account with the bank. Now, that's not necessarily a bad thing. And most of these actually have a switching offer right now, which will really increase your cash you can get. And I've covered those in detail at becleverwithyourcash.com/banks. So that's First Direct, Co-op, Nationwide, and Lloyds Bank. So open an account, switch over, get that switching money, get some other perks that they might sometimes offer, but also access these regular savers. But before we get to those, let's talk about the one that's paying the most, 8%. Which is the highest rate you can get from all the accounts out there. Principality Beyond Society, this regular saver. However, it is just for 6 months. So you can put your money in, get this sky high rate for 6 months, but the amount of interest you're going to get isn't a huge amount. So I personally wouldn't be fussed with this. I'd focus elsewhere. But mathematically, it is the best, highest interest rate you're going to get on your cash for that 6-month period. Then we have First Direct at 7%. Switching offer there, incidentally, is £175. Then we have HSBC, 7%. No switching offer there. Cooperative Bank, also 7%, but that is variable, so it could change. Switching offer there is £150. Nationwide has a 6.5% regular saver. The switching offer there is £175. Plus, you can also get 5% interest in the current account at the same time on £1.5 grand. And the Club Lloyds one, the switching offer there is bigger. It's £200, although the regular saver rate is just 6.25. Then let's very quickly round these stuff and have a look at the best ISAs. Obviously, I've already told you about the best easy access one, that one from Trading 212. That is certainly going to be hard to beat right now for easy access on an ISA and good for transfers as well. Although you do is no branches if that bothers you. It is an online one. 1 year fix. The best one here is Virgin Money again, 4.61. That has dropped a huge amount over the last month or so. This one does require a Virgin Money current account. If you don't want to go through that faff or don't have one, then Synergy is giving you a 1 year fix at 4.55%. You'll notice these are all lower rates for fixes in an ISA than they are outside of an ISA, but obviously remember the returns here are completely tax-free. So if you've got large amounts of money, then sometimes the ISA will win out over going past your personal savings allowance on fixes elsewhere. Anyway, let's look at the other ones. Synergy is back with 2 years and 3 year fixes, 4.4 and 4.35% respectively. And then UBL are the top ones for the 4 year and 5 year fix at 4.05 and 4.1% for that period. And lifetime ISA, the top one here is actually Uninvested cash in a stocks and shares lifetime ISA from Doddle by AJ Bell, giving you 5.09%. Again, these are just the top ones, the snapshot from all the different opportunities out there right now for you to save your cash. Be clever with your cash.com/savings is the place to go to see these and more options and get all of those updates. Now, I have talked about a lot of savings accounts here, which you may not have heard of these providers. Don't forget, you can look at reviews over our sister site, Smart Money People, as well, just to make sure that other people haven't had bad experiences with them. My name's Andy Webb. Thank you so much for watching. Check out these videos here for more ways to make the most of your money.